As you know, we're AgeWise, and we're here today for your financial well-being. This webinar is being presented by Bob Lee, who is Mariner, and they are a patron sponsor of AgeWise Colorado, which means they are one of our great supporters and help us get all the information that you're looking for to you. Service providers, articles, webinars. Bob is a certified financial planner. He's a professional, an accredited estate planner designee, a certified exit planning advisor, and holds the ABA Certified Trust and Fiduciary Advisor certification. A well-qualified man. We do ask that you mute yourself and turn off your camera. It really helps with the recording and the posting on YouTube. If you have any questions as Bob is doing the presentation, just go ahead and put them in the chat. We will ask them at the end of his presentation, and sometimes questions get answered as someone moves along. We also ask that you put your county of residence in the chat. We have a grant that we need to report our outreach to individuals, and webinars count. Your name is never given. It's just there are this many people in these counties. We also want to remind you we are a 501c3. Any contributions are greatly appreciated, like our patron donor, Bob and Mariner. And if anyone has some spare time, feel free to give me a call or send me an email and volunteer, because we can always use some extra help. And that's enough for the AgeWise commercial. Bob, I am turning it over to you, and thank you so much for being here.
Well, Barbara, thank you. It's an honor and pleasure to be talking with you and everybody on the webinar today. I appreciate the opportunity to just share more about financial planning, the importance of it, why it happens, why, what are some outcomes. But to kick things off, I'm going to take one step back and say I'm a ABA certified trust and fiduciary specialist emeritus. I have gone through that course and engaged in the services, but because I'm no longer in banking per se, I've chosen to step up to an emeritus status. That being said, I'm here to help. I'm here to help educate, here to help answer questions. I'm here to help frame decisions for clients who engage in Mariner services. A little bit about Mariner for a second here, and I guess I'll just share my screen. Forgive me here. Where am I here? There we go. Let's go that way, and then I'm going to go into presentation mode here. And so a little bit about Mariner. We are a national registered investment advisory firm, serving over 56,000 clients with over 600 billion in assets under advisement, both on the private wealth side as well as the institutional side. We provide services from very basic financial planning to investment management to retirement plan services, estate planning services, tax prep for certain clients, and filing tax compliance, as well as services to business owners. My goal today is to help provide education about what it is, what a financial plan is, how is this supposed to work, how does it work with you, and provide a forum to ask questions in an environment that is, not feeling like you got to buy something. And that's kind of the goal for AgeWise, right? Let's educate so that people can understand and make, decisions on follow-up, decisions for specific issues that they might have, and get you the right resources that would help improve the status of where you are today going forward. So that being said, today's topic is about, the financial plan. It's where it all begins in our world because we see planning as a way to get to an end goal. And people have goals, they have constraints, and they've got resources to achieve those goals. And so my thought here today is I'll talk to you about our workshop and how we approach things. And feel free to again chat questions into the Q&A box. We'll try to answer them throughout this session, most likely at the end of my discussion. And if you have or desire to have a one-on-one follow-up, you can either reach out to Barbara, she can connect you with me or my office, or you can just simply call my office and schedule time to meet with one of my team members. That being said, this is again, a series of educational workshops. Session 1 is about where it all begins with the financial plan. Session 2, we dive into a little bit more of budgeting and balance, making the most of what you have today, and finding out through your income and expenses how best to sock away money for the goals and objectives that you set out in Session 1. And then, of course, Session 3, we step in and talk about what it means to invest with confidence. So that being said, it all starts to me with how does financial education work, right? I think we all come in with information that might be true, might be partially true, and might not be true, based upon our access to information more so than ever today. And so what we want to do is we want to understand what the principles are of economics, how do they apply to your life, and how do they work, and what strategies or what actions and what behaviors do you need to incorporate in order to, at the very basic level, spend less than what you earn, save what you don't spend, and grow it so that you can achieve a vision, I call it, an ideal lifestyle down the road. And so we take the concept of traditional economics, thinking that everybody's rational, right? We don't focus on a goal and we kind of chase what we hear in the news, on the internet, from friends, cocktail parties. But we want to change that paradigm to behavioral economics. How do we take this information that we've now got received, and how do we put it into a practical and emotional framework that applies to us both today and years from now? And so we focus on identifying, defining those goals and envisioning what I call painting a picture of your ideal outcome, or more importantly, your ideal lifestyle. To me, we think about retirement as an end goal. I look back and I say retirement was my father and grandfather's goal. Now, today, with our health, our opportunities to live off of our capital longer, we live longer. I'd say retirement's about defining your ideal lifestyle as opposed to calling it retirement. I'd like us to think about that as we, depart today. How do you want to live your ideal lifestyle on the capital that you have and the commitments that you made? So thinking forward here, right, the puzzle takes into consideration, right? What am I earning today? What are my expenses, right? How much of those expenses are covering, or how much of that income is covering expenses? And what is it I want to do with what's left over? And then I need to understand what is the tax implication for what's left over, and how should I help have that money grow, assuming that I don't need it tomorrow. Looking forward, we also want to make sure that we have a plan in place for the unforeseen, the unanticipated, the life events that we just haven't built into our reality. That could be a death, it could be disability, it could be a divorce, it could be, a disagreement. We want to make sure that we've got those covered, and we want to manage the risks associated with, protecting that cash flow. And on the long term, we want to have a plan in place for the end game in mind. Everybody's going to, for better or for worse, exit this world. I want to put in, everybody's going to have their life celebrated when we're not here. And so we want to make sure that what's left over that we're not going to be using is being managed or transferred to those who we love or owe in a manner that's consistent with our values. And that's called an estate plan. So we want to be able to weave all of those goals, long-term goals, into what matters to you as you live your ideal lifestyle. And then finally, right, we don't want to be looking at any one particular situation in isolation. This takes in consideration all aspects, all lenses. I kind of look at it as, you know, a point in time with a series of cameras on us and how those cameras project us in each one of those areas will allow us to define what the plan looks like for you and put the puzzle together. So we change the paradigm here. What is changing the paradigm? It means just changing the focus, right? As we look at just the general investing and investments, my industry, for lack of a better term, tends to focus on the means. You know, you have capital now. How can I help you grow it? That doesn't necessarily solve what we're trying to accomplish, and that is your goals, right? We want to be able to understand those goals, dreams, hopes, and why does it matter to you? Let's get the need behind the need out on the table so that we have a mutual understanding and alignment that helps make sense of what we're doing today and what the plan is and how we're going to execute going forward. So when we work with a fiduciary, like somebody at Mariner or a registered investment advisor, we want to have that end in mind, and we want to have our trusted advisors understand what that end is. And from there, we can work back into designing what the plan looks like, given what you have today in the bank account, in your investment account, in your income, expenses, and liabilities, so that we can find ways to either save more, spend more, retire earlier, or redefine what it is you want to be doing if you're in a situation where you don't want to be doing it forever.
Bob, can I
Yes,
interrupt with a question because another person had this
sure,
similar question?
absolutely.
Is it ever too late to look at this and make some changes? You
Uh,
know, we have a gentleman who's been retired for 20 years and is 85. Is
right.
this, you know,
No, I
for
appreciate
all
that.
of us who are either retired, semi-retired, or close to?
That's a great question. We may, I would say no, it's never too late to review, understand, validate, and or make changes as necessary. As long as your goals are in place and ready to support you in a time when, you're living off that wealth. Does that answer your question, Barb?
Yes, thank
Okay.
you.
Yeah. Good question, right? So, and here it is, right? The importance of meaningful goals. Our goal, I guess I'm going to ask the question out there. It doesn't have to be answered, but are goals static? For my clients, the goals are never static. There's always something new, something changing in their life that ends up helping them or having them redefine what those goals and objectives are and mapping them back to the resources they have to help them achieve those goals. And we want to have clarity in those goals. We want to keep the end in mind with a longer term vision, right? We might be looking at, the fourth quarter of our lives, putting a football analogy out there, versus what we have in terms of executing on some sort of short-term goal with the idea that we have the capital or energy to achieve that short-term goal. I often say, once we've achieved that goal, what's next? So working with an advisor, working with an advisor helps investors and people and families understand what that end game is, and we work back into how to get there. Again, just putting a couple quotes out there, right? You can see Martin Luther King, his his idea was having a dream and not a plan. Plans are practical, but do not inspire or motivate action. Dreams can actually bring about the necessary change. So what that's telling me is that having that dream in place and being able to articulate it and have the ability to define what it is or how to accomplish it gets you to the planning stage, right? The other one is you don't want to build a ship, or if you want to build a ship, don't summon people to buy wood, prepare tools, distribute jobs, and organize the work. Rather, teach the people the yearning for the wide, boundless ocean. And that's what we're doing, hopefully, here today. It's like, let's lay the foundation for what education is needed for each one of us in general. And then we can drill down in specifics if you need that additional help or just want a second opinion. Right? I look at three hypothetical scenarios for us. Let's ask ourselves, assume you had all the money you could ever need, right? Some simple questions to start outlining what a plan looks like. How would you live your life? Where would you spend your time? Right? In my case, my clients I categorize it in four buckets, right? They're spending time with their family, they're spending their time on experiences, they're spending their time staying healthy by exercising, and they're spending time serving either charities or mentoring others to grow themselves and or wealth that those people have created value in, meaning businesses. You know, the flip side is that, if your doctor discovers you have a rare illness, but you feel perfectly fine, but will die in 5 years, what will you do with the time you have remaining? How do we plan for that? How do we spend those resources? What do we need to do to accomplish those life's dreams that I just shared with you? Right? What changes in your life? Right? What strategies you need to kind of focus on, reprioritize to accomplish all it is you want to do within that defined period of time? And if so, what are you willing to do? And what aren't you willing to do? The last one I don't necessarily like to focus on, but let's not live a life of regret is kind of that last scenario that I prefer we didn't have to go to. But if we do have these topics, all of these scenarios can help us define what that financial plan needs to look like. So going back to Barb's question, right? I would once again validate the idea that it's never too late to plan. Things change, realities change, and we can control what we can control. The plan itself, as long as it's followed, whether it's a health plan, whether it's a financial plan, whether it's a life plan, right, will help you feel motivated, have purpose, and live life to its fullest. Again, I'm going back to what makes sense here. We begin with the end in mind. Generally speaking, that end for most people, it's retirement. I like to call it living your ideal lifestyle, right? It doesn't fit for us anymore, right? We want to have a positive connotation of a goal required to have sufficient motivation to achieve it. And so if we can think about financial independence as retirement, right? We're not going to retire from, but we rather retire to. So that leaves me with a question to the audience today. You might be in retirement. What is the next goal? What is the next thing you want to be doing? And what resources do you have to get to accomplish that? If you're nearing retirement, right? What is it you're going to retire from? But more importantly, what does that ideal lifestyle look like after you retired or left the position or role or career that you have spent time years perfecting? What is that next chapter in your life? So then we have to ask ourselves, how do we set those goals, right? What is an effective way to set a goal? I look at it as 5 specific characteristics. We want to be specific about it. We want to be able to measure it. It should be actionable. I want it to reward or be rewarding to me, and I should commit to a certain amount of time. I know that we all have goals. We get out of bed every morning, we make our own bed. We've completed one activity. We've been able to say we've completed one activity for that day. The reality is we've got much more to accomplish, whether we're 85 and above, or whether we're 65 and heading into retirement. The goal setting is the same. What do I want to do? How do I measure it? What steps do I need to make to achieve that goal? And how do I reward myself in the time in which I've set for myself to accomplish it? And so from that base level, we have the opportunity to, again, build out, taking that information, we have the ability to start looking at resources. We have resources and expenses, and start looking at how we're going to allocate them to achieve those goals. Our first phase of planning really does involve discovery. So when you're working with an advisor, right, we want to ask a series of fact-finding questions and discovery questions. Fact-finding questions include things like how much income are you earning, what sources your income, what are your expenses, where are your investments, how much have you saved for retirement, or what are your retirement savings goals, right? Discovery questions are the whys. Why do you want to accomplish? What is it you want to accomplish, and why do you want to accomplish it? How do you visualize spending your time after you have grown, stepped into retirement? We don't want to be sitting around watching TV. I hope. The reality is that many of us will when we don't have that plan, that smart discovery in place. So then, as we look at what retirement is, whether it's leading into retirement, at retirement, or after retirement, these are same planning considerations for each and every one of us on this webinar today, right? What can we risk with our capital, and are we willing to risk? What can we determine is a sustainable withdrawal rate, right? And withdrawal rate takes your income that you receive outside of your investments, subtracts out your expenses, and then takes a look at the capital and just helps determine what that amount or that rate of capital we can withdraw so that we can spend and meet those goals. And of course, time horizon, now short, medium, and long term horizons make all the difference in the world when it comes to planning and, more importantly, investment management. And again, how do we define or set up a savings and investment plan to achieve that withdrawal rate over the time frame that we are looking at, and managing that investment or savings plan to comport or be consistent with your sleep well at night factor or the risk tolerance. Most investors or clients often ask, what is risk? And so if I look at having to define risks as they relate to financial planning, right? The risks can be boiled down to one thing. What is the actual outcome versus what the outcome was that I wanted? Risk is anything that basically keeps you from reaching your goals, right? How do we minimize that risk of setting those goals today knowing that they're going to be achieved in the future. And then we have capital that has to help meet that future goal. That's simply all it is at this point. You know, typical areas where we define risk are risk of inflation. We see it every day today. We've got rate risks. We've got a risk of outliving our assets, the longevity risk. And then, of course, market risks and volatility that we have to be able to bake into your financial plan. And then one area that I look at is whether it's us in the young, earlier in life or after we've retired, right? Is our human capital. Our biggest component is not what we own. It's you and your ability to earn income in the future. Now, when we're working, we take home our paychecks, we pay our taxes, we save a little bit, and then a little bit grows, right? But over time, we're going to get to a point where we're not going to have the ability or desire to want to put our labor to earn income. And that's where we need to figure out how to use our capital that we've saved over the years and position it to provide us with income, and income that not only provides for us today, but will be able to provide us in the future and not be eaten up by inflation. So again, the other step we look at is, the unforeseen, right? How do we think about and use a risk man? How do we plan for unforeseen events in our life? Generally speaking, we want to be able to convert our human capital to financial capital, right? As we save more over time, right? Our financial capital increases and our need for insurance generally decreases. Given the way we have evolved and we live longer, there is a risk of outliving or at least using more assets than you planned for later in your life if you are in need of getting healthcare or assisted living. And this is, again, where AgeWise has resources that can connect you with those resources to help find areas of support, whether it's independent living or skilled nursing or memory care, that will potentially deplete one's assets faster than the plan had called for. And so when we look at insurance for later in life, we may want to have a plan that has a policy in place that will help support those unforeseen events, such as long-term care insurance. This will help preserve some of the assets, the financial capital that you have built up over your lifetime. And, as your estate plan kicks in, plan for passing on what's left over to your loved ones. And so I'm going to leave it right there. These are my nice little disclosures. And I am going to turn that back over to Barbara, if that's okay with you.
So let's see, do we have any questions from the group? I have to say, I got to see Bob's presentation last evening. He sent me the PowerPoint. And I went, I know those questions. I've got those answers. And what is interesting is that when you literally sit down and take a look at them and think about, what if I only had 5 years? What am I missing that I haven't taking the time, as opposed to, I know what I would do if I suddenly had gazillions of dollars. I really didn't. I had to think about it. Some frivolous things came to mind, but Having recently met with someone and done this myself, and I'm almost 80, I really appreciate your approach, Bob.
Oh,
I
thank
think
you.
it makes us think a little bit more about what we really want.
I would hope so, right? In again, planning should exist at throughout one's life. Plans can
Absolutely.
get adjusted. I'll give you an example. I have a client who was was doing very well um, throughout their working years and into retirement. He happened to be an inventor, so a lot of his human capital was put into financial capital and used to continue and spent on inventing. Um, they're at a point in their life where they're no longer earning the money inventing as they used to be. And unforeseen circumstances popped up. Spouse ended up being diagnosed with bone marrow cancer. And so, what was a plan that had them living a comfortable retirement has changed dramatically to address the need to cover for unanticipated expenses that insurance won't pick up. And we have to now rejigger or reformat the entire plan, not based upon an age of passing of 95, but one that might live or might exist for maybe 2 to 5 years, and prep the surviving spouse on what life's going to be like without his spouse. So again, it's
Wow.
about conversation. It's about having these deep dive conversations, whether you're 85 or 90 or 65 or even 35. It all starts with understanding what those goals and objectives are and how to take those goals and objectives and put them on paper in a manner that can help look at it through the eyes of your ability to earn income and spend money.
Exactly.
So.
Does anyone else have a comment or a question they'd like to make? I would, I guess you were so comprehensive, Bob. Thank you. No questions. I would ask those of you who haven't put your county of residence in the chat, if you would do so. It personally helps me in reporting on some grant funds, and that is most helpful. We will have this recording posted probably within the next week. Feel free to share it with your friends and family. It will be on our website. And we love people to visit and find the information that they need.
And we hope you find it helpful. I will also encourage you not to steer you away from AgeWise, but if you want to get, there's a ton of free information about investing and planning at our own website, www.mariner.com, under the Insights tab. You can access white papers, webinars, and podcasts to help supplement this type of education free of charge. And if you want to have a one-on-one, feel free to call my office, speak with Dee Dee. That number's 303-470-1209, and she'll set you up with an appointment for a complimentary consultation or even a second opinion with one of my team members.
Would you put that in the chat real quick,
Sure,
Bob?
sure.
The other thing is, having noticed that this is a kind of a three-part workshop, I will certainly, to let you all know, invite Bob back to do part two, and eventually part three, because I think it's very valuable information. I appreciate your taking the time